Good morning everyone, my name is Niknur Ashikin binti Wahid and today I will be presenting on the background and the purpose of insurance planning. The roots of insurance planning go back to ancient times. According to Investopedia, as early as 3000 BC in Babylon, traders used a system called bottom rate. This allowed them to take loans to fund a shipment, and if the cargo was lost at the sea, the loan did not have to be repaid. The similar practice were seen in ancient China and India, where merchants spread their goods across a multiple ships to reduce the risk. In medieval Europe, goods created on mutual aid societies to support members during difficult times. This became the foundation for life and health insurance. The modern insurance sector began in the 17th century. A key event was the Great Fire of London in 1666, which destroyed over 13,000 homes. This led Nicholas Bourbon to set up the first fire insurance company. Around the same time, marine insurance was formalized at Lloyd's Coffee House in London, which later became a Lloyd's of London, which is a famous insurance market. During the 19th and 20th centuries, as industrialization and urbanization grew, insurance expanded rapidly. New types such as liability, health, accident, and auto insurance emerged. Actuarial science also developed during this time, using statistics and mathematics to assess risk and set premium accurately. Regulatory bodies were also created to protect policyholders and ensure insurance company financial stability. So in conclusion, insurance planning transforms uncertainty into a manageable risk. By including it in their financial strategy, individuals can protect their savings, support their dependents, and maintain financial stability even during a difficult times. So let's move on to the next part. Insurance planning is an important part of a good financial strategy. Its main purpose is to protect people and families from financial problems caused by unexpected events like illness, disability, accidents, natural disaster, or early death. This event can cause a big emotional and financial impact if there is no insurance. According to HSBC Malaysia, insurance gives peace of mind during uncertain times. It acts as a financial safety net to protect both your current lifestyle and your long-term goals. Insurance also helps protect your long-term financial plans. For example, health insurance prevents savings from being used up by high medical bills, while life insurance ensures that a family can still pay for their needs if the breadwinners pass away. Costs rise globally. Having health insurance has become even more important. Insurance planning also ensures a financial stability. Health, life, property, motor, and travel insurance all help keep finance balanced during unexpected situations. For example, property insurance protects homes from disasters like fires or floods, while motor insurance protects vehicles from theft or damage. Insurance also supports business by protecting them from risks like property damage, employee injury, or legal issues. On a bigger scale, insurance helps communities recover from disaster and reduce their dependence on the government help. Some insurance plans also act as investment. This is good for those who want both protection and a long-term growth. In conclusion, insurance planning is more than just buying a policy. It is a proactive way to manage life risks while maintaining financial stability and reaching long-term goals.
Hi, my name is Nur Ayashikin. I would like to present the importance of insurance planning. Life today is full of uncertainties, from sudden illness and accident to unexpected job loss or natural disaster. Anything can disrupt our financial stability. That's why insurance planning is more than just having a policy. It's a smart and proactive way to protect our income, asset, and our future financial of our loved one. It builds a strong foundation for long-term financial security. When unexpected events strike, the financial impact can be overwhelming. Insurance provides a financial safety net that helps cover high medical expenses, replace lost income, and settle debts such as housing loan. Without proper insurance, we might be forced to dip into saving, borrow heavily, or even sell important assets just to survive. With the right insurance, we can avoid financial ruin and maintain stability. One of the greatest benefits of insurance planning is peace of mind. It allows us to transfer the financial risk of major events to insurance companies, relieving us from the fear of what if something happens. With that protection in place, we can live with confidence, take calculated risks, and focus on our goals, knowing that we have a solid backup plan in case life takes unexpected turn. Insurance is also key to achieving long-term financial goals. whether it's securing a child education, preparing for a comfortable retirement, or protecting a home. Insurance help keep those plans on track. For example, if a family breadwinner is no longer able to work, life insurance ensures that the children can still go to school. Health insurance also protect your hard-earned savings from being drained by sudden medical costs. Some types of insurance, such as whole life, universal life, or endowment plans, come with an investment or saving component. This policy grows in value over time and can serve as an additional source of funds in the future. You may be able to withdraw or borrow against the policy or even use it to support your retirement. This dual benefit makes insurance not just a safety net, but also a valuable part of your financial portfolio. Everyone's financial situation is unique. That's why insurance planning should be personalized based on your age, income, family needs, debts, and future goals. It's also not a one-time task. Life changes, and so should your coverage. Regularly reviewing and updating your insurance plan ensure that you and your family are always fully protected in every stage of life. To sum up, insurance planning is a powerful tool that protects you from financial shocks, support your long-term goals, and give you peace of mind. It is not an expense, it is an investment in security. With the right insurance strategy, you are not just planning for the unexpected, you are building a stronger, more resilient financial future for yourself and the people who matter most.
Hi, my name is Anila Aisha binti Roslan, and I will talk about how climate change is creating problems for insurance. We will look at the main issue and the recommendation to solve them. And for the first issue is because of climate change, we see more floods, heat waves, heavy rain, and frost. These are not big disasters, but they happen more often and cause a lot of damage. Many insurance companies are not ready for this. They still use old models to measure risks. For another issue is insurance companies still use old weather data and old farming reports, but the climate is changing fast. So using old data gives a wrong result. This means insurance prices may be too high or too low. Besides that, sometimes the insurance payout are not fair. This is called basis risk. For example, someone may lose their crops but gets no money, while someone else gets money for a small loss. This happens when insurance is based on data from far away, not from the actual things. Other than that, many companies do not use new tools like data science or AI. They use the chance to predict the problems later. Also, the data is often not local. This makes pricing unfair. Last but not least, new technology bring privacy problems too. People worry about how their data is used. Also, people in high-risk areas may find insurance too expensive or even not available. This goes against the purpose of insurance, which is to help everyone share insurance.
Hi, my name is Alanur binti Muhammad Azli, and for my part, I will be explaining about the statistical information about how climate change is affecting insurance risk, especially in agriculture and home insurance that I got from the article that we choose. Over time, insurance risk has shifted. Today, frequent but less severe weather events like heavy rain, strong wind, and frost cause more financial losses than major natural disasters. These events might not seem extreme on their own, but when they happen repeatedly, they add up to big insurance claims. For example, in 2017, 9 states in the United States experienced an unexpected risk. This one event cost over $1 billion in crop damage. Then in 2018, heat wave across Europe and Asia led to the major agricultural losses and a rise in food price. Statistical models also show some worrying forecasts. Home insurance claims are expected to increase by up to 50% due to weather-related damage. There's also a 40% chance that risks are being underestimated when using large-scale data instead of more accurate local farm level data. As we can see, the chart in the report shows several important numbers. Government do try to help. In Canada, for example, the cost of insurance is shared between the federal and provincial levels, but the farmers
still pay a big portion, up to 67% for full coverage. The problem is data limitation make accurate pricing difficult. If the data used is too general, like county level instead of individual farm data, the risk might look smaller than it really is. Also, farming is always changing with crop rotation and new technology, which make it harder to predict future losses. So, all this shows that the insurance industry needs better tools and data to manage risk linked to climate change. Using more accurate forecasting methods like machine learning can help to reduce these gaps and prepare for future challenges.
My name is Dini Nubalkish binti Samsudin. Now we will move to additional issues related to insurance planning. In Malaysia, they are still affecting the industry and public participation. Let's begin with the low insurance penetration rate. As of 2023, Bank Negara Malaysia reported that only 56% of adults in Malaysia have life insurance or family takaful. This means almost half of the adult population remain uninsured. The main causes include low financial literacy, limited awareness, and the misconception that insurance is unnecessary or too expensive. Without proper insurance, many people rely on government aid or their own savings, which puts them at higher financial risk in the event of illness or death. Next is the issue of affordability. Due to the rising cost of living and slow wage growth, most Malaysians, especially those from the B40 group, prioritize daily needs like food and shelter over long-term financial protection. Risk-based pricing has made premiums even higher for those living in high-risk areas like flood-prone zones in Kelantan or the Klang Valley. This creates inequality where the most vulnerable group are also the least protected. To address this, we need targeted solutions like government subsidies, micro-insurance, and public awareness campaigns. The third issue is the challenge of digitalization. Since the pandemic, the insurance industry has moved toward digital platforms like mobile apps, automatic claims, and online policy management. While this improves convenience, it also excludes certain groups, especially older adults, those in rural areas, or people with low digital literacy. Furthermore, as insurers collect more personal data through AI tools, ethical concerns arise over data privacy and transparency. It's important that digital innovation does not come at the cost of fairness or access. Lastly, I want to touch on the takaful sector, which offers Sharia-compliant insurance alternative. While the sector is growing, public understanding remains low, especially in rural areas. Many Malaysians do not fully understand the concept of takaful, such as risk sharing and mutual aid. Some even see the products as confusing or complicated. To improve participation, providers must simplify policy structures, communicate more clearly, and make takaful more accessible, especially through online platforms. This effort is also in line with Bank Negara Malaysia's Financial Sector Blueprint 2022-2026, which aims to increase inclusion in financial services. To conclude, insurance planning is an important part of personal financial management because it protects individuals and families from unexpected events such as illness, accidents, or natural disasters. It helps people secure their savings and continue working toward their long-term goals without financial setbacks. In Malaysia, insurance coverage remains low, especially among the B40 income group and those living in rural areas. Many people still cannot afford insurance or do not fully understand its benefits. Challenges such as high premiums, lack of awareness, and limited access to digital services make it harder for people to get covered. The takaful industries offers great potential but needs more promotion and education. To improve the system, all parties must work together to ensure insurance become more affordable, inclusive, and accessible to everyone.
To address this issue, we need to use modern tools like AI and machine learning to can help predict weather and farming problems better. We also need to use satellites and remote sensing to get more local data. Other than that, insurance companies should make new products that fit local needs. They should use data from the actual farm or place not far from away. This will make insurance more fair and accurate. Besides that, the government and private companies should work together. They can help make insurance more affordable and easy to get, especially for farmers. And also, people need to understand insurance better. If farmers and homeowners know how it works, they will use it more. Community insurance is also helpful. Everyone puts in money and share the risk. Lastly, we can collect data from smartphones and satellites in real time. This help insurance company give better coverage and respond quickly. To conclude, climate change is creating new problems for insurance, but with the technology, better data, and working together, we can create a better solution.